Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sea of red as, of course, Bitcoin and the crypto market is just popping up and popping down, just kind of doing the sideways crabbing shuffle. And you can see, of course, that we are entering a week of earnings on the stock market. And so everyone is on edge, but we also have the potential for the double whammy, right, of inflation data that may be coming in. And so, guys, if this is both negative, if both of these things are negative, then we could see an absolute meltdown on the Bitcoin and crypto charts. If they're both positive, maybe we see a blow up, right? And so, guys, we really are at this critical inflection point. We are at this tipping point on the charts. And to that end, I want to revisit something that we haven't looked at in a while, which is the good old alpha origin channels. Now, guys, some people try to have origin channels in this crypto community, and they absolutely fail at it. But what I'd like to show you is that time and time again, the alpha origin channels have just protected our community and has been one of the important assets that we have on this channel compared to others. And so let's just go ahead and take a look at what we've seen in the past. Now here we have the alpha origin lines bloodline, and guys, you can see that whenever we're on top of this bloodline, we are effectively in a bull market. Now, whether or not people want to define it that way, I really don't care. Okay. But we've been depressed underneath it, and then we've really been just at the bottom of the market and going to run anytime that we were able to secure the alpha origin line, the bloodline here. We did go on a massive run. That happened here in 2017. It happened here in 2019. It happened here during the virus era in 2020. And then, of course, we are looking for that possibility right now. And look at this price action. I don't know if you guys can see it because these lines on TradingView are pretty small, but where we are right here is actually, let me just make this a color that you can see here, right at the alpha origin, channels bloodline. And so, guys, we do have a chance to hold on to this bloodline and then go for an epic run in the style of these runs that we've had before, potentially up here to this critical line somewhere, in the 70s, and then more modestly somewhere here in the mid 40s. And then if we just want to be super conservative, maybe 35,000. So the alpha origin channels here are suggesting 35,000, maybe 50,000, and then potentially maxing out on a mid-cycle rally somewhere around 70,000 or so, okay? And then having a potentially a sharp pullback. Now, what would be the case if we don't secure the bloodline? What if this is just a deviation? Okay, you can see we had a deviation over here in 2016. We had a deviation over here in 2017. We got rejected over here in 2016. So rejected, rejected, rejected. We even got rejected over here in 2015. So rejected many times before we actually made it above the bloodline. Then we just had this kind of bullish era, right? This bullish era of Bitcoin over here, where if we do just kind of a sine wave drawing, you can see it's kind of like up and down. So the question is, are we getting that extended sine wave to the downside now that we've had this extended sine wave to the upside? And this is a very valid question because this is how markets move. They don't always just go on the same level. It's not super predictable. There's a certain amount of randomness to it. But in general, we do have these kind of like cycles to things, and then you can see cycles within cycles, right? And so, are we in a down cycle within a down cycle, and do we need to have more blood in the water before we end up pushing up and potentially making it up to that bloodline? which could take another year or two. And so, guys, we're gonna just analyze that in this episode. And one thing that I want to consider here, okay, is that you know we've had a nice run. Okay, we've had a nice run, and if you look back here, right, and back in time, whenever we were down kind of near this secondary bloodline here, or this green line here, we typically had a run up to that bloodline area, and it's been pretty good. Okay, like we had a run, and then we had a major pullback, run, pullback, run, pullback. Okay, now we've had the same type of run, a pullback. We've had another type of run like that, and it wouldn't be unreasonable to have a pullback uh, once again. Okay, so let's just not be super greedy about things. I know everybody wants everything to be instantaneous, but again, if we break under this bloodline, it's just going to suggest that it may take more time for this chart to play out, and that we may be again on the bottom side of this sine wave, which could take a long time. And if we are on the bottom side of that sine wave, I would be looking to the lower lines that I have marked out here in the channel that really haven't been retested, really since this era, okay, this era of Bitcoin way back here. And, this may seem kind of extreme, but you have to remember that we did have a double top on this chart, and our diagonal has pretty much been down. By contrast, we had a blow off top here, right? And, its diagonal really was sideways, okay, sideways. And so if you're thinking about how Bitcoin moves, it shouldn't be a surprise that after a double top, which is a super bearish signal, that our chart is going this way as opposed to this way. Okay, so we've got the diagonal downward rectangle as opposed to the sideways rectangle going on here. And maybe this is a big old bull flag for the future. Who knows? It doesn't matter. It's just like I said, it's a sine wave, okay? But one thing that you need to consider is that maybe this half of it isn't over, just like we had this half, right? And then we had this half. Maybe there's this half, and then we have this half. And so we may need to explore the rest of this half before we really pump up. And I know it's been a while since we've taken a look at the good old alpha origin channels here, but I did want to just bring it back since we are again hitting that bloodline, which is super important. Failing to hold that does suggest to me that we're going to check back into this green box, or potentially even lower. Okay, and that's just, again, by the nature of this being a diagonal box versus this one being a horizontal box. This was a blow off top. We didn't have a blow off top this time. Otherwise, we would have gone to that like $100,000 level, okay, that those guys were predicting. So just ignore the blow off top. This thing was horizontal, and this one is diagonal. And so if we do explore the rest of our, fractal, basically, then I would be looking at levels potentially around 18,000, potentially around 14,000, potentially even down here around 8,000 to 10,000. And let me just set up some boxes. Okay, boxes where I would be looking at for a Wyckoff pattern. Okay, now why a Wyckoff pattern? Because we get these patterns just time and time and time and time again. We get these Wyckoff patterns, and they signal the bottom of the market, or they have signs of weakness. Okay, and so if we start putting in a Wyckoff pattern in any of these boxes, then I am going to be a buyer in the areas in which it's showing some type of a Wyckoff bottoming. So let's just say that we fail to hold the bloodline here, okay? And then we fail to hold this 300 daily EMA. We just break down like crazy, because that's a super important EMA. Okay, we break down to like 20,000, right? Like we failed to hold 25,000, so we break down to 20,000. Then I'm gonna look to see what type of Wyckoff pattern we can put in here, and are we showing signs of strength? which could then potentially take us out, and this was just a fake out, okay? Or are we showing signs of weakness, which could then take us down to this kind of 18K level, right? And if we fall down to this kind of like a 17, 18K level and just have a flash wick back up, I'm going to see if we similarly have a bottoming structure and then signs of weakness or signs of strength, okay, at the end of the pattern. And that's going to be my cue to, just continue the long there, okay? And same thing here. Should we fail at 18,000, which according to the Alpha Origin channels, it is possible, then we could come all the way down here to 14,000, get a nice bounce, start doing a Wyckoff pattern, and that could be our chance to turn around again. And failing there, we're going to be at the super, critical like bottom, level, and I think that would be just your greatest opportunity to buy. And then most likely that one would succeed. And this, of course, is using a regeneration of this pattern that we have up here on our way down, just like we regenerated this pattern here. Okay, just like we regenerated that pattern on our way down over here. You see this? It's almost identical price action, okay? And it essentially just repeated what's inside of the rectangle one more instance. And so if we have the same type of structure being developed over here, then what I would suggest is that this structure right here is potentially going to be repeated. And if we look at it, it's actually happening as we speak. Okay, you can see these little humps right here. And that's exactly what happened at the top of the market previously. Okay, and so what's going to happen next is either we're going to make a higher low and then show sign of strength on a little bit of a Wyckoff pattern, or we are going to continue to bear flag down and then make a Wyckoff pattern that shows potentially signs of weakness and carries us even lower. Now, I don't have a preference on any of these things. I think any of these outcomes is going to be favorable because we're traders over here at Alpha Commission. We don't really care which one happens. Now, I know a lot of people missed the bottom of the market over here, and so they're really lusting for this. Well, that's a good argument why this might not happen. Okay, first of all, this virus era, like quarterly backfill, that was just a flash wick essentially. I mean, good luck if you made the decisions to buy, down here. A lot of people didn't even have it on their mind when this chart was tipping over. And should we have some type of economic crisis or some type of a war or some type of banking collapse, you can't move your money around, something happens, right? Then you're probably not going to catch that wick down into this area. Okay, I would suggest that this is going to be what's going to send us down here. Okay, otherwise, like if we just ignore this chunk of it, okay, otherwise we're only really talking about this structure. Okay, and that's the structure that I think that we're going to eventually put in on this area should we fail to hold the bloodline. Remember, all of this is contingent upon us failing to hold this bloodline. If we break down from where we are right now, then I would expect that we're going to put in this type of a pattern similar to what we did over here, and it's going to take a lot more time, but we're going to get through it, right? And then we're going to work our way back up to the bloodline, and then the benefits of that is going to be even higher, okay, maybe even $105,000, right? Because you could imagine something like this, right? And then we eventually get back above the bloodline. That's going to be that kind of like $42,000 to $50,000 area, right? And then flipping that, maybe we could max out, 90s, to that kind of 100K area. And that would be just like an epic bull run, okay, after a pretty traumatic crash, okay? That would be the bull run that everyone's looking for. Now, what I'm suggesting is that the thing that triggers this bull run is going to be the Fed basically injecting liquidity into the system, or governments around the world injecting liquidity into the system. Now, what could cause that? A banking crisis, some type of depression-like potential situation, a world war where these central banks around the world are just putting out money. Anything could cause that. Okay, the world has ups and downs. Okay, it's not important to focus on the news specifically. I'm just saying anything could cause that, and that trigger point is what's going to send things. Okay, and you're going to want to be in on that when it happens. And so if you just want to be conservative, you're looking for a double bottom on this chart. Okay, you're not looking to capture down here. You're looking for a double bottom on this chart. And so you really don't need to be thinking about prices underneath 18,000. And you definitely don't need to be thinking about prices underneath 15,500. But should it be a serious crisis that is appearing on the world stage, then I would just humbly suggest that maybe you should be having some bids in that 14K area, and then potentially even in that 9K to 10K area, where we might get a flash wick and then go. Okay, and that's going to be the crisis that triggers all the money into the market, and that's what's going to make us go. Now, this is actually like stretching the rubber band back and then firing the rubber band. So it's not a bad thing. Okay, it's scary, but it's not a bad thing. I mean, assuming it's not like a nuclear holocaust or something, and you're in one of the targeted cities, right? Assuming that it's not a total banking collapse and all of your money was wiped out. Okay, but that's the risk to reward situation, right? Because you might not want to be spending your money on crypto if we're in a crisis like that. Okay, like that's what happened to people back here. They thought, oh, I might be losing my job, everything's shutting down. Maybe I should just hold on to my money, right? So it's up to you, but this type of deep retracement is what's going to fire things off. Now, if we get just kind of a rounded bottom over here, and we don't really get that deep kind of pullback, then you could potentially suggest that there could be just a slower pace, because there's not going to be the crisis in the world that requires all that money to be injected into it, and so you're probably going to get a much slower pace, and then we're probably going to see the full cycle of that sine wave, which, by the way, I've talked about this many times on my channel, but we're probably going to see the full cycle of that sine wave, and it could take many years. It could take 10 years for that to play out, okay? It could take 10 years for this to play out. Don't be surprised by that, because the slower we go, the less, the less money that they're going to just inject in there. It's going to be the less, this less supercharged environment. And so it's really going to be the crisis, the crisis that really spikes things, and you get those juicy entries and then those crazy blow off tops because all the money's in there. People don't know what to do with it, so they just put it into crypto, they put it into stocks, right? They just kind of gamble it away, right? And so, yeah, guys, I just wanted to explore that possibility because I've already explored the possibility of us hanging on to this bloodline. And just to flesh that one out, just a little bit. That's not really the purpose of this episode, but just to flesh that one out. There's the possibility that, that was just the first half of this. This was just the first half of this one. And that, to be honest, maybe this cycle isn't over yet. Okay. And so maybe, we have more range to explore. And so maybe we could just keep going up. Okay. I don't want to project that there's just one length to this cycle. We can already see half of it, is pretty much where we are. And so it could make sense that there's another half on the top up here before some pullback, and then then something crazy pullback, just for future cycles. Okay, maybe the cycle after this cycle that we're entering. But we do have to be aware of this possibility again because of the diagonal nature of this very typical double tap, right? It's basically like double bottoming, but on our trend line, which is now a downward diagonal, and that would be the bottom of it, okay? We did the same thing over here. We did a double tap on the bottom of our box, okay? Just this one happened to be going sideways, this one happens to be pointed down. I hope I didn't just repeat myself too much, but I did want to drive the point home and just make it as crystal clear as possible of why I see that downside. Now, as long as we're holding above the bloodline, which currently we're falling, if you notice the price is showing a lot of weakness here, okay? We're on this 300 EMA. We don't want to break that one on this 2-day, okay? That's going to send us it's a very supportive EMA. Okay, look at this. The whole top of this market over here was supported on that EMA. This looks very familiar. The structure here, the structure here, this looks very familiar to what's happening over here. And we lost that. We had a pretty dramatic fall. So I'm warning you guys. I'm just warning you. Be careful. We need to bounce. We need to bounce soon. Get to that 35K up here at this blue line that I have on the Alpha Origin channels. Showing weakness here is going to have a 2-day squeeze through the 300 EMA to the downside, and that could bring us down to 25 or even 21K. Okay, and it looks like that's what's initiating. Should we get a bounce here, or should we get good news next week? Let's say that earnings come out better than expected, then maybe we just narrowly, avoid that squeeze to the downside, and we get better than expected inflation data. We're going to need to push up above 29,500 and then flip this area to get to that 35. Okay, that's what we're going to have to do. Okay, if we're going to get through this. Otherwise, we're squeezing down to the downside. We're going to put in a Wyckoff accumulation, which is then going to end in signs of strength or signs of weakness, which potentially can take us lower. Got it? I hope that's very clear. I'm not flipping my perspective until we break my bloodline, okay? The bloodline has been the most important line in crypto over the last few years. And again, I'm telling you, like other guys have different origin lines on Bitcoin, but these lines have just predicted it time and time again. They have kept people safe time and time again. Underneath the bloodline is a good value to be buying. These are buy boxes that I have, right? But you want to trade at the end of it, right? You don't want to hold it. You want to trade at the end of it, depending on whether it's showing signs of weakness or signs of strength. Okay. The white line is always the final capitulation level, okay? And we're still capitulating essentially. The yellow line has always been kind of the halfway point between the top and the bottom of the market, excluding the blow off top, which we didn't really have on this last one. And you really don't want to be buying anything above the yellow line ever, because you're probably not going to get your money back, okay, until years later. But underneath the yellow line, you can start to consider the DCA. Underneath the white line is when you want to be starting to buy. And then should you ever get a chance under the bloodline, that's when you want to accumulate. Now, you've had months to accumulate. And the question is, do the powers that be just want to accumulate more? Are the banks out there, are the institutions out there not happy with the prices that they're getting because they missed out on all of this action? And do they want to just push it to a super value, okay, and then wait for a launch moment based upon liquidity in the system? Well, if you're smart money and you have all the time in the world and you're entering a risky period of time, then maybe, maybe you want a deeper value. Okay, that's the premise that I'm suggesting. All right, guys, I hope you enjoyed this episode. Thank you for watching. I really appreciate your support. Your subscriptions and your likes really help motivate me. Guys, that's your alpha for the day. Stay safe and happy trading.